Hello, good day. I welcome you once again to my YouTube channel. Today we are continuing with what we started the past video. We're looking at partnership accounts. But today we're looking at the extension of talking about the profit and loss or income statement. We're looking at the appropriation part of partnership and income statement of partnership today. So please let me just share my screen and then so that you can actually be part of what we are doing at this particular point in time. Just a moment. So today we are going to be using Excel basically to do this. And I believe you can see my screen now. Okay, I believe you can see the screen now. So we are looking at appropriation part of the income statement of partnership. Okay, so that's what we're basically looking at. So once again, I would enjoy that you subscribe to my YouTube page and of course also share, like, and make comments as much as possible. When I visit, I'll be able to just answer whatever questions or comments that you have been able to make. So today we're looking at the appropriation part of it. Last video, I did an introduction, to partnership account, and we talked about partnership. We talked about, partnership deed. We talked about, we move further again to look at the different components or contents of irregular partnership deed. And of course, we talked about other matters relating to partnership today. So we're moving a little bit further. So one of the distinguishing factors between a sole proprietor business and of course a partnership is this part, the part that we're considering today, appropriation. So how do we appropriate? We look at some of the appropriation items last time. So now we want to look at how to, we just want to solve a particular question that relates to, appropriation. So let's look at this question right now. It said, Ade, Tunde, and Shade are partners preparing their accounts annually to 31st December. Ade is entitled to 500,000 per annum as salaries. Interest is allowed on capital at the rate of 10% per annum. In the same vein, 10% interest is allowed on current account balance, outstanding as at the beginning of the year. Mark that word, outstanding as at the beginning of the year. Interest on drawing is charged at the same flat rate of 10% per annum, irrespective of when it is drawn. This is very important because in some cases you charge, interest is charged based on tenure. Okay, so but now in this case we're saying irrespective of the time, it is 10%. Profit is shared as follows. Ade, 1/2, Tunde, 1/4, Shade, especially 1/4. The partners' balances as at 1st January 2023 are presented below. Capital account, you have the column at the current account. Ade, Tunde, and Shade, 12 million for capital for Ade, and then 8.4 million for current. Tunde had 8,650,000, and then Tunde for current account also had 7,250,000. Shade at the beginning of the year had 4,750,000, and then for capital, and then 6 million for current, for current. So let's look at the other matters there. During the year, the partners made the following drawings. Okay, Ade 4 million, Tunde 2 million, then Shade 5 million. I believe you can see that. Profit available for sharing at the beginning of the year, at the end of the year, in 2023, December, was 35.750, 35,750,000. And so the question, prepare appropriation, partnership appropriation account and partners current account in columnar form. So this is what we have. Okay, that's a question. I believe that can just take your time to just go through one after the other, the salient points there. be able to understand. So three people, three persons, engage in the partnership. Ade, Tunde, and Shade. All right. And the terms are be given to us. Okay. Ade was entitled to 500,000. And of course, he got 500,000. Interest is allowed. That's as per the constitution or deed. Okay. How much? 10%. The same vein, interest, of course, is also allowed. 10% is also allowed. Then interest on drawings is also 10%. Profits to be shared accordingly in this same form. So let's begin to look at how to solve this. Now, I've tried before now to do to put together maybe like a frame of how the whole thing would look like. So let me hide this. So that's what we have. So we have Tunde. I'll be able to do just to save time. So we have the profit, from your income statement. All right, so income statement is what we're going to be talking about here. Then we have the salary. We have so everything has been, structured just for us to fill in the gap as much as possible. So let's look at how do we start? So profit brought down. What was the profit brought down? For let me put the naira sign. Okay, here. So we have a naira sign. There we also have a naira sign. Okay, that's the denomination. Nigerian naira. So profit, as at the beginning or as at the end of the year rather, the profit was 35 million 750, 35 million. So we have 35 million, okay, 750. There. That's number one. Okay, so we've been able to take care of them. So he said that one of them got salary amount 500,000. So that's 500,000 pounds. Who are they? Got salary of 5,000. Okay, so we have 500,000 here for him. All right. Now interest on capital. So because this is salary and it's going to be taken away from the profit brought down. So automatically we're going to be having this one as a negative entry here, just to make sure that at least we are captured that appropriately. I'll do the formatting later. Now, let's look at interest on capital. Interest on capital. It said that Ade is entitled to 10% interest on capital. So that means that he will get 10% on capital. And that will fetch, how much? If he's getting 10% on them, look at what we have. Okay, interest allowed on capital at rate of 10%. So 10% of 12 million is 1.2 million. So we have 1.2 million there. Tunde is going to get 10% as well. 10% of 8,650,000 is 8,650. That's 865,000. Then Shade is also getting 10%. So that will give us 475,000. That's what he gets, at the end of the day. So let's move on. So what's the total of this? So interest on capital, the firm is one that is paying, interest on capital. And so this will have the implication on the profit will be that there's going to be a reduction. So let's put the figure in the right perspective here, the total, here. We can just come and put minus. The next one is also minus, then there's also minus, and then we have this figure there. All right. So let's go to interest on current account, balances for the different partners. So we have 10% as well. So what's the current account balance? Let's go to our question. We have 8.4 million, then 7.250, and then 6 million. So 10% will fetch how much now? So let's begin to calculate. 10% of 8.4 million naira will give you will give us 840,000. Okay. Then this one will give us 725,000 naira, and then this will give 600,000 naira. So that's what you're going to get. So by the time you add everything together as well, because the firm is also the one that is paying, is going to reduce ultimately the profit, the amount that will be available for them to share ultimately. So let's go and then let's add them together. And that's what we have now, 2,165,000. Now let's look at interest on drawings. Okay, how much did they draw in the course of this in the course of the year? So let's go and let's see the amount they drew. This Ade drew 4 million, Tunde 2 million, and then Shade also drew how much? That's 500 or 5 million. So we're looking at 10% of this same figure. 10% of 4 million will give you 400,000. 10% of 2 million will give you 200,000. Okay. And then 10% of 6 million will amount to 600,000. So here we are. So how much at the end of the day? Now, what will be the effect of interest on drawings? Because the partners, took drawings. I mean, they drew money from the boss of the company, or rather, as it were, the firm. All right. Now, they are meant to pay interest based on whatever it is that they are taking. So because they're meant to pay interest, the effect of it is that it's going to increase the amount of money that's available for the partners to share at the end of the day. So this time around, we're not going to be deducting, rather we're going to be adding. So we're going to be having a positive, amount here. So let's look at everything together. All right. So plus 200,000, then plus 600,000, and that will fetch us 1.2 million. 1.2 million. So sorry, this is let's look at this. This is 5 million and not 6 million. So sorry, apologies. So let me just use the appropriate whatever, even I can navigate my way to use that, and that will give us 1.1 million naira. All right, so that's what we have. So at the end of the day, what do you want to do? Want to calculate, everything together, and then deduct all the one they have to deduct salary, deduct interest on capital, deduct interest on current balance, on current account balances, and then also next time around add interest on drawing. So that's what we're going to be doing. So let's go and do that even right now. Okay, let's go and do that right now. Now let me push this one here. So let me do a summation. So that's what we have. That's and what we have now. Let's see. Let's see what we have here. So it's 631,654,000, naira. That's the balance that we have. Okay, that's the balance that we have for the partners to take home, for the partners to share, together. All right. So let me put down so it's a bit done. Now we are going to talk about share of profit now. So now this is the amount that's available at the end of the day for them to share. It started with 35 million, but now they had based on the figures that we have, they'll be sharing 31,654 645 thousand naira. So how much are they entitled to? Are they should be given how much? Half of the amount. So what it means that we're going to have this divided by 2. So that's what we're going to be having for him at the end of the day. We're having 15,822,500 to take home. All right. And then again, we can also go back same vein for Tunde is entitled to a quarter of the amount. So this one is going to be divided by 4. Okay, and then again, Shade is also going to have 1/4 divided by 4. So at the end of the day, when you add everything together, okay, what do you have? You're going to be having the same amount. So this time around, that means that this amount has been appropriated and given and shared to the different partners. I mean, Ade, Tunde, and Shade at the end of the day. So there will be nothing left by the time your appropriation is, done, finally. So here we have a nil figure. To put the right perspective now, we can just put a negative sign to capture the the treatment appropriately. So we have that one, and then you're going to be having a zero figure at the end of the day. So that talks about appropriation, basically, appropriation at the end of the day, basically. So let me bring this back. So let me just probably just let me kind of format this appropriately. Okay. I believe that we've been able to get, the right understanding, based on what we have been doing since we started. So that's talking about appropriation of appropriation. Oh, I should have not in dollars. Okay, let me go back. Um, Let me go back. Started with Naira, so let's not bring it all out there. Okay, custom, okay. Then let me put this, I believe, which gets it away. All right, so there we are. So now, so that means at the end of the day, zero balance, at the end of the day. So thank you for at least being part of this. So let's go to the second aspect of the question. Second aspect says that we must also prepare the partner's current account. Remember in the last video, I said that as much as possible, um, there are two structures when it comes to capital accounts. The first one is fixed capital account, and then the fluctuating capital account. In this case now, we have current, we have capital, and then we also have current. Okay, here it's now assumed that we're talking about the fixed capital, structure, the one that has capital account, be separated from current account. Here we are to do only the current account, in the columnar form. So I already done the sketch of it, here. So we have Ade, Tunde, and Shade, there. And then let's look at the current account of the partners. What is going to look like at the end of the day, so that you have an understanding of how to present current account. So we have, let me move this a little bit down from what we have here, so that we have their different, we have their names, up there. So we have Ade, okay, and then we have Tunde, and then we also have Shade, and then again, we're going to repeat them on the other side. So here we are. Tunde, Ade, Tunde, and Shade. Okay, let me highlight them. So these are the partners. Okay, that's the partners. All right. So now let's look at how the whole thing will look like at the end of the day for the partners. Now, so we're talking about only the um, uh, current account now. So let's start. What's the balance brought forward? That's the starting point. Balance brought forward for Ade 8.4 million, 750, right? And then how much for Shade? 6 million. So that's what, Now, depending on you, depending on the way you want to start, if you want to be moving in between, then you can do that. If you want to finish on one side, and move to the next one, you can also do that. But let's take them one after the other. So are they made drawings based on our questions? Okay, our questions, drawings. Okay, how much for are they got 4 million? 4 million. He also took 2 million. And then Shade took 5 million. All right. So interest on drawings, how much? So we can go back to our accounts. I mean the appropriation part of the account. So are they for him interest on capital? Let's go to interest on capital. Interest on capital 1.2 million. Okay, how much for the other man? Tunde 865, 865. Okay, and then Shade 475, 475. So now that's the interest on current account. Interest on current account. Okay, interest on current account. So let's go for Ade 840,000, 10%. Remember, and then 725,000 for Tunde. Okay, 725,000 for Tunde. That's it, and then 600,000 for Shade 600,000. So that's what we have. And then share of profit. Okay, before we get there, let's look at interest on drawings. Interest on drawings. Okay, interest on drawings. It's going to be a debit because they are paying back. All right, they are paying the interest. So let's come here. Here we're going to debit it, no, the account for the different partners there. So we have 400,000 and then 200,000 and then 500,000. So, okay, based on these figures that we have here, look at them. Okay, 400,000, 200,000, 500,000. All right, so that's what we so let's go. The last one will be the share of profit. Share of profit 15.822 and then 7.911 and then 7.911. So that's what we have. Interest on share of profit. We have 15.822, 822, 500. Okay, then we have 7,911. Okay, 250. Let me confirm. Yes, 250. 50 is there. 250. Okay. And then we also have 7,911, 250,000. All right. So we can sum up everything now. If you want to sum them up, what do we have? So let's go to submission. So that's what we got there, 14,986. Then we can just copy and then put everything, as appropriate and define it. So total for them there. So on the right side now, it's higher than that's what we have on the left. So we're now going to be using the figures that we got here. That's 26 million. Okay, and then again for Tunde 16, and then for Shade that's what we got there. So now what will be the difference? We have to begin to find a way to compute and to calculate to find out the difference between the two. So what's the difference between the total here and what we have here? So this 4.4 million. Okay, so let's try to come up with this. So let's see how what will become of that at the end of the day. So we have, 21,862,000, and then we're also going to be having this same figure for Tunde and Shade as well. So the balance brought down will be what we have as balance carried down, in the column for Ade. So we have the same, we have 21,862,000. And then we have this figure there. And then we have this for our gentle lady Shade, there. So we can now highlight this so that we make it a little bit different from the others. So that's talking about partnership, the appropriation aspect of it, and then of course the current account balances. Okay, for the problem or the rather the questions that we're just been able to solve as much as possible. So I believe that we've been able to get a good understanding of how to, prepare an appropriation account. That's the extended part of the income statement for partnership. Okay, so that's what we've been to achieve, even just I know even right now. I believe that you have better understanding now, and anytime you have questions relating to this, you'll be able to solve it as much as possible. If you have any comments, any question, don't forget to hit the comment button, okay, so that we're able to make your comment. So if you have also learned one or two things here and you feel that yes, this particular class has been a blessing unto you, why not just subscribe to my channel, okay, and then share, like, comment, so that at the end of the day, you also be able to get any other video that will be coming, relating to anything that has to do with accounting, has to do with basically financial reporting. So thank you very much for being part of this session again this hour. Thank you. So I'm bringing the whole thing to a close right now. Again, don't forget to hit the subscribe button so that you're part of it. Thank you very much for your time.